Hey, this is Chris Trapani, the Mortgage Pro. You know, people always ask me, Chris, what is PMI? Well, PMI actually is an insurance that insures people who put a small down payment down. What happens when people put a small down payment down is it's a big risk to the lender. So people need to say thank you to the PMI companies. They're always saying to me, Chris, I don't want to pay PMI, I hate PMI. Remember, say thank you, or you'd have to put 20% down and not be able to buy a house unless you did. Now, the Federal Housing Administration, owned by HUD, requires PMI on all their loans. That's how they offer a 3.5% down payment and you could buy a house. And often we do these 0% down loans. 0% down. Hey, how big a risk is that to the lender? Well, that insurance allows them to insure the loan so you can buy like that. That's a big deal. Now, there's lots of private mortgage insurance companies. If we're looking at a conventional loan, a Fannie Mae or a Freddie Mac loan, and they have private insurance. Now, the higher the FICO score, the lower the PMI payment. The lower the loan to value, for example, if you put 3% down or if you put 15% down, obviously the PMI is going to be cheaper if you put 15% down. Now, an unnoticed option that people don't think about is, especially this works if you have a high FICO score, you can pay PMI in a lump sum and not have those monthly payments. Usually about 3 years of those monthly payments equal that lump sum. So that's a really big deal. Sometimes if people can't qualify with that extra PMI payment, nobody wants to pay it. But say thank you to those companies. So call me, I'll do an analysis, figure out what the right option is for you. And as always, this is Chris Trapani, and I'm going to help you fire your landlord.